Started, and I appreciate you, everybody. My name is Doug Beavis, obviously Director of Business and Government Affairs for the Upper Tampa Bay Chamber of Commerce. We are recording this. I will edit the front of it off and post it back on our YouTube page. If you do go to our YouTube page, make sure that you subscribe. We're trying to put all of our content up there. And as a realtor, I know the market is a little crazy with the inventory. Very low and prices going up. I just pulled off the most recent stats. Active listings, when you compare year over year, January 2020, there were 46,000 active listings. And 1 year later, January 2021, 23,000. So a reduction in active listings in the market here of 50%, which obviously leads right into the average sales. January of 2020, average home prices were $283,000. January 2021, average home price $331,000, which is an increase of 17%. Average days on the market, January 2020, 60. Average days now, 44, which is a reduction of 27%. So obviously a seller's market, and it's tough for probably realtors and obviously mortgage people because there's so many people vying for so little inventory out there. And I think as the interest rate goes the economy, I think. And to talk a little bit more about it is Nathaniel Bittman of Security National Mortgage Company. He is right here in Oldsmar in the medical building at Curlew and Tampa Road. And I want to thank you for being here this morning and give us a little insight as to what these mean and maybe what it means to the economy in general, I guess.
So a few things. Thank you very much for allowing me to join you this morning. Hopefully you can hear my audio okay. I just want to thank the group again. My name is Nathaniel Bittman, and we do have a wonderful location here in Oldsmar. We've been around in the Oldsmar market now for 10 years. So really, the goal of this morning for me was at least to give you some clarity as far as what's happening from a market standpoint as in relationship to housing, interest rates, overall trajectory of the market. The first thing I want to point out to the group is we are facing somewhat of an irregular market. I think we all know that as a result of the pandemic. We're still recovering from some of that. There's some inconsistencies in the market that we see. We study bonds very, very carefully. So when you look at mortgage rates, and mortgage rates are impactful and housing is powerful. And why is this conversation this morning so crucial is because whenever we're facing concerns about inflation, we're facing concerns about unemployment, job growth, so on and so forth, the Federal Reserve does a lot in terms of fiscal policy to make sure that they keep interest rates low to create an attractor and an appetite for demand for housing. And the reason why housing becomes really important from an economic development standpoint is because housing has tremendous sprawl. And what we mean by that is if you think about a consumer that is looking to buy a home, when they do buy a home, whether it's new construction or an end home loan, there are a lot of derivatives and tentacles that come off of that. So from the acquisition and purchase of a home, a consumer may go out and purchase all new appliances. They may get rid of all of their bedding. They may get rid of all of their bathroom goods. They may want to remodel their kitchen. They may want to remodel their bathroom. They typically want to upgrade their furniture. So really from just one acquisition of one individual home, there's massive tentacles in terms of where capital goes into mainstream circulation. So as a result of that, one of the things that we sometimes get concerned, could this be artificial? When we look at employment numbers, so on and so forth, are we dealing with a robust economy? And when the Fed does a lot of fiscal policy to drive rates down to stimulate housing, that is a maneuver to a certain degree to keep the economy robust, to make sure that expenditure happens. So, we see what's happening in the marketplace right now, and I just want to share with all of you just kind of a quick chart that I thought might be interesting for you to know as we look at bonds and what happens with bonds. Jerry Cumey, you should be able to see, I think, MBS Highway at this point right now. So basically what we have here is, this is an example of the bond market. Now, you don't have to be someone that's sophisticated in bonds and treasuries, but the reason I want to share this with you is because I want you to see what the chart you're looking at. These are called candlesticks. And really what you need to know is as the price of bonds goes up, interest rates go down. As the price of bonds goes down, interest rates come up. So we've seen this sort of very interesting trajectory up and down, up and down, up and down, big dip down, a lot of up and down. So when you're seeing these bond prices coming down, keep in mind as bond prices go down, interest rates come up. So, we're seeing a little bit of a downtrend. We're seeing rates starting to creep up just a little bit, and the Federal Reserve is working aggressively to keep bond prices at a certain level, to keep interest rates down, to make sure that they can keep housing and the economy moving in the right direction. We have reason to believe that we may see interest rates on a 30-year fixed rate product as low as somewhere around the 2.3 range this year. Just as an example, 1 year ago today, interest rates on a 30-year fixed rate product was closer to about 4%. So today, interest rates are hovering somewhere in the vicinity of anywhere from 2.7% to 3.2%, depending on the consumer's credit and qualifications. But if you're an excellent borrower putting a certain amount of money down, there are specific qualifications, and you're not paying points to buy down a rate. So we're talking about just something very raw. You could see something on a 30-year fix in the vicinity of around 2.7. Now, what I want to tell you is that is alarmingly low. Yes, that may be good for home ownership. It's great for refinances, and it does great for buying power for a consumer that wants to purchase a home. In terms of an economy, that's really, really concerning because the dollar continues to depreciate. It creates, the lower those interest rates, the weaker the dollar. The weaker the dollar, the more you're making our exports overseas become cheaper. Now, a lot of that has been offset over the years, and we like to use sort of China as an example of the Asian market. China's been really good about buying our treasuries and bonds, really driving down the dollar very low. And from that, they've been able to buy a lot of our exports and goods and services for very cheap. Again, that was a nice offset as a result of them buying bonds and treasuries. So a lot of technical terms this morning, but really what I want to be able to drive home to everybody, you'll see a very low interest rate market for a very, very long time. And again, the point to that is to make sure that housing continues to get stimulated. There is some concerns about a housing bubble. A lot of people say, well, have we kind of exceeded our demand? I'm going to change my chart here for just a moment. So if everybody can be patient with me for just a second as I do this. But one of the things I wanted to share with the group is another important crucial chart that I think will be helpful for all of you to see. The chart displayed in front of you is sort of a real estate report card, and it tells you really where are we going in the direction of housing values over the duration of the next 5 years. And all I really want you to kind of focus on for whatever it's worth is I want you to focus on the content in the middle, in the purple and in the blue. And what I want you to see over the duration of the last 61 years, appreciation values for homes and booms and busts. So remember, we've seen a lot. We saw a collapse of the housing market in 2007. We saw a collapse of the housing market in 2008, 9, so on and so forth. But I want you to see that over the duration of 61 years in Pinellas County, the average appreciation from a home has been approximately 3.86%. So between booms and busts, we've always been up. We've always been in the black in terms of appreciation. What's remarkable is in the last 5 years in Pinellas County, year over year, we have seen an appreciation growth of approximately 7.1% in housing. That's absolutely tremendous. What I want to share with you that's even more, really more fascinating, and what all of you need to look at very carefully is if you look at this section here in the blue, what is the projections for the next 5 years? And in the aggregate, over the next 5 years, they do see appreciation and growth, approximately 20% in housing in the Pinellas County market. Now, this makes tremendous sense to me. Why? When you really study very carefully the collapse of the housing market in 2007 and 2008, a lot of that has to do with generations. My generation, so when you think about buying power for consumers in the housing market is anywhere between the ages of approximately 33 to 45. So when you look at my generation, Generation X, when we hit the peak of our buying power, we were the smallest generation group in history. So you had the baby boomers, which were a very, very high generation group in terms of population. And then you had Generation X, which was the lowest. Now we're being preceded by the millennials and the post-millennials. The millennials and the post-millennials, the millennials will far exceed the baby boomers, and the post-millennials, from a population standpoint, will even exceed the millennials even greater. So The post-millennials will be the greatest population in history. And if you look at the number of household formations here in the state of Florida, it's extraordinary the amount of growth that we're having. So what I want to bring to many people on the call, and many of you know this, I've lived here in the Bay Area for 25 years. We are facing extreme density issues. So when you look at Pinellas County, there is simply no room for growth. And at this point, you're kind of facing tear downs and then construction going up. We really can't go, we almost have to go up. We can't go across. So when we look at the population growth, when the post-millennials really come to age, we truly will be out of housing in the Pinellas County market, which explains some of these numbers in terms of where appreciation and growth levels go. I want to couple that you do want to be very careful and keep a keen eye on what's happening in Hillsborough County, because it's been brought to my attention that by 2027, they will stop issuing licenses for new construction. If that's the case, and you will not see new licenses issued by 2027, again, a significant demand for housing in terms of population growth, demographic growth, and a number that we're not looking at very carefully is we're not looking at the formation of household formations in the Hispanic population, but we are seeing a massive influx of Hispanic growth in our community as well too. So when you compound the millennials, the post-millennials, the amount of Hispanic growth that's happening in our market, we simply just don't have enough housing for that to sustain that for a period of time. So really a lot of exciting things happening in our area. I see there's somebody on the call that's handling transit. Good luck to you. I don't even know how we're going to have any room for cars in our area anymore. But those are definitely some concerns. So the Federal Reserve trying to keep rates very low and sustainable, at least for the duration of a year. Let's talk for just a moment about the federal funds rate, because I want to dispel a myth. And a lot of people don't understand this. Whenever the Fed comes out and they say that we're going to keep rates to zero, people often have this perception that means that a 30-year fixed rate mortgage or a mortgage is going to be at zero. That is not the case. That's something entirely different. In the previous chart, I had shared with you treasuries and bonds. That's not the same thing as the federal funds rate. The federal funds rate is what the Fed provides to banks to lend from a bank-to-bank transaction. So let me give you like an example. If a bank has a concern because there's a pandemic that consumers are going to strip cash out of the bank, and a bank will have limited funds to be able to lend, or they'll have limited funds, a bank may decide that they're not going to give any more car loans, boat loans, or credit card loans. So the federal government comes out and they tell banks, listen, don't panic. I don't want you to panic. I'm going to lend you money at 0% interest so that you can continue to lend. So don't worry about consumers' deposits. If consumers start to strip deposits out because they're panicked, because there's a pandemic and there's a concern and they want to hoard their cash, I need you to keep lending, Mr. Banker. So we're going to keep rates at zero so that you can continue to do short-term lending. And we'll keep them at zero for as long as you need to continue to borrow money. So please understand that when the Fed says we're going to keep interest rates at zero, it's really for short-term lending. That's for car loans, boat loans, and credit cards. That's not long-term lending like mortgages and transactions like that. That's an entirely different market. But the Federal Reserve and the Treasury combined are working on fiscal policy and strategies to keep long-term treasuries and bonds low so that we can continue to keep the housing market thriving because of sprawl and economic development. All right, I'll take a breath to see if I can answer any questions. Any questions out there from the group?
Any questions, Commissioner Eggers? I know you're in the real estate market as well, and obviously a county commissioner. Any thoughts? You're muted. I should say chairman of the county commission.
Thanks, Doug. Yeah, I mean, it's obviously something we've been worried about for some time, and that's not only affordable housing in the sense of affordable housing for our like workforce and workforce folks, police, firefighters, teachers, and that level of income that we want them to be working here. We're having a real problem getting enough affordable housing, and so there's a real competition. I think. Do you go by Nate or Nathaniel? I'm sorry.
Nathaniel. Thank you.
Nathaniel.
Yes.
Nathaniel mentioned that we're competing heavily between our housing. There's still a call for some stormwater and environmental. And then we're obviously trying to keep some land available for industrial and jobs. I mean, so it's a real competition for the little land that is available. And it is a concern. We're really, in the last penny for Pinellas, as everybody knows, we had some money set aside to really get some affordable housing going in this market. And we're getting a lot of developers in play because of that now. They're seeing some opportunities there. But with that said, they're still struggling to find places. And it is a redevelopment county. And what I'm hearing Nathaniel say is that don't expect any relief anytime soon. It seems like we're going to be in that kind of rising prices, less availability of land. That means, so it's going to be a tough environment to find spots for folks to live. And so it's going to be challenging times, exciting times as far as probably the health of the economy. But if we can't find places for people to live, that becomes a problem in the near term to long term. So
I'd like to point a couple of things out to that I think is really important for people to look at. Now that you're seeing more and more institutions in the North and in the Midwest and in the West, and some of these, definitely the Northeast, more and more institutions and businesses are allowing individuals to work from home. So what we're finding is we're seeing sort of that generation, group of like Generation Xers and so on and so forth. And even some millennials that are saying, well, if I can work from home, I really want to go ahead and buy in Florida. One, and the West Coast of Florida is still extremely affordable in comparison to Naples, in comparison to Miami, Boca Raton. So still a very affordable place to live. I do believe that the Panhandle is going to start to get some real traction as well. But when you're looking at people that are thinking, I want to have some real estate holdings, money is very cheap. We're practically stealing it today at 2.75. So people are starting to think, I want to make an investment. I may not live there now, but I want the investment today. I want to rent something out via Airbnb or do some sort of a short-term rental. So they're looking to make an acquisition in something in Florida, and they like Tampa Bay, especially now that we're a title town, winning the Super Bowl, the Stanley Cup, going to the World Series, right? We see what the Rowdies are doing. So a lot of news right now in Tampa Bay, and a lot of people are very attracted to that. So part of what we have to look at is the migration from the North, as people are thinking, I can work from home. I want to buy a property in a residence in Florida. If I can work from home, I'm going to live in that location. And you're seeing younger people that are going to be more like snowbirds. So during the wintertime, people coming down here, and during the summertime, people going back up north. And during the summertime, when they're back up north, those individuals are going to rent their housing. So another component I want to mention to the group is the migration of snowbirds from the north coming down here that may purchase more housing, and then for the purposes of rental and investment. So, we have to look at that piece as well too, in terms of, how do we sustain that?
yeah.
I think, Nathaniel, I got a question, and I know you mentioned 2027 that Hillsborough County is going to stop issuing building permits. Who makes that decision and why? I mean, I guess I can understand why, but.
So it's a great question. This is what was presented to me from the Tampa Bay Builders Association, I want to say a year ago. And I don't know if that's still the case or not, but that's sort of like a rumor that had been permeating a little bit. My understanding is for starters, I don't believe at some point, whether you're in St. Petersburg or Hillsborough County, you really can't build in downtown anymore. Mostly because if you had to evacuate downtown, how do you evacuate everybody in time, right? So that's one of the concerns. But in terms of sustainability, in terms of infrastructure, in terms of density, that becomes a concern in certain areas of Hillsborough County. So again, it's just something that was presented to me in an economic development call that I had. This was presented to me about a year ago. So I would just recommend to all of you that are on the call, you may want to do some Google searching, looking into that. I don't know if that's changed, but that was something that was a topic, for quite some time, really mostly last year, and how to do a density of infrastructure.
Yeah, Nathaniel, can I add to that, Doug?
Yeah, I was just going to ask you to comment. Is that something that the county commissions, either Hillsborough or Pinellas, even have the authority to do? I don't know what arena that is.
let me just say, yeah, we do. I mean, in Hillsborough County has actually recently or considered, and I'm not sure if they actually did it, but they're putting a moratorium for new permits in South County, because South County is exploding down there. The infrastructure to take care of it, and I happen to chair Tampa Bay Water right now. There's some real issues, not necessarily on Tampa Bay Water's end, but on their infrastructure to deliver quantities at the right pressures for areas in South County right now. So we're looking at supplying, we have plenty of supply at Tampa Bay Water, but once the other entities receive that, they have to be able to get that infrastructure out and with the right pressures. And South County is already experiencing some issues. So to Nathaniel's point, I think there will be pressure in the short term. That'll get relieved a little bit as they adapt on the infrastructure side, but they just can't sustain the growth that's going on down there right now. So at some point in the next 3-4 years, I'm sure there will be a limitation to how much growth there will be. But between Hillsborough County South area growing like just crazy, and Pasco County also, if you go along 54, you can see apartments and condos being built from one end of the county to the other. And it's just incredible what's going on. And they're struggling also with their infrastructure to support what's actually being built. So, yeah.
Hey, Chuck, real quick on your end, Clearwater Gas, are you seeing similar? I mean, if we do continue, whether it's in Hillsborough or Pinellas or even Pasco, for the infrastructure on your end, obviously the gas, are you seeing the potential for not being able to provide the infrastructure or keep up with, I guess?
I mean, it's certainly robust, but we haven't had it. We're staying up with it. We've got the budget to do it, and as long as they're building, we're meeting the demand.
Awesome. Okay. Yeah, I like it. Can we use a different term, Nathaniel? You called post-millennials. I don't know if you've looked at the age demographics on this call, but you called post-millennials the greatest population. Can we call them the largest and not necessarily the greatest? Because I think we would venture to say that, I think our generation is pretty great, just curious.
Well, I'm sure in terms of style, mystique, being an avant-garde group of people, yes, I would say, that generation definitely excels, but I'm still keeping a keen eye on, I do want to share with you that millennials, dispel another myth that, people talk about millennials living at home with their parents and having a sense of entitlement and so on and so forth. I do want to share with you the post-millennials are a different group. The post-millennials are starting early. Post-millennials are getting married earlier. They're making investments earlier. I mean, you see the explosion, and really almost in my term, I'm very concerned about the stock market. I'm concerned about price earnings ratios. I'm concerned about, Bitcoin, AMC. I'm concerned about Tesla, and I'm concerned about some of these, what I call sort of renegade entities that are things like Robinhood, or people that are, entering the market and being day traders. But there's sort of some unhealthiness happening in the stock market that drives some concern for me. But I do want to share with you that the post-millennials are very focused. They're a focused group. They want to buy housing early. They want to make money. They've seen their grandparents, Generation Xers, and they've seen their great grandparents that are living longer now, suffer through some very difficult times, and they don't want to be like that. So I just want to caution all of you that, watch the post-millennials very, very carefully. They're a serious group. They want to make a good living quick. They want to get married quick. They want to own property quick. They want to invest. They're not really spenders. They're not spendaholics like the millennials, maybe even the Generation Xers. They like to hoard cash. So they're much more thriftier. So just keep an eye on the post-millennials.
Interesting. I mean, I know I'm seeing in the real estate market, I kind of scratch my head sometimes. I just sold one out at Clearwater Beach, and he's probably 34 years old and didn't bat an eye at $1.3 million. And, so it astounds me. And even in my own neighborhood here in Oldsmar, maybe it's because I'm getting older, but I look at and it's exactly mimicking what you're saying. Younger, they're already cranking out kids, and, and does that mean that they want to build it quick and build it early and then retire earlier? Or do they want to continue on that trajectory to be the richest person in the world?
That's a really great point. So, I think with communication and technology, the way that it's evolved over time, and you look at Instagram and Facebook and so on, I mean, this is really a generation that kind of grew up, the post-millennials, not the millennials, but the post-millennials grew up in a much more information-centric environment. They're watching, they're listening to podcasts, they're emulating, and they're seeing people on Instagram and Facebook and all these different instruments and TikTok, and they're seeing people that are very successful. So there's a different air of competition there. I want to be smarter, I want to be better, I want to be faster, I want to be healthier. You're seeing more vegan, you're seeing more of a green environment. These are people that are more concerned about the environment, eating healthier, cutting fats, just a different mindset, different group. And by the way, for those of us that are an aging population like myself, I love this group because that means that they could sustain Social Security.
Oh, that's
I'm good with
excellent
that.
point.
I'm good with that. Keep working, keep putting money into Social Security. I'm good with that.
Okay, I all of a sudden love the post-millennials. They're my favorite all of a sudden. Yeah.
There you go. Love them.
Hey, Nathaniel, what's the age group that you're saying about the post-millennials?
So Jerry, I may lean on you to do a quick Google search there for me, but I want to say that their age bracket is anywhere from the age of about 21 to approximately 33, if I'm not mistaken. And I think now that the millennials are now at that maturity stage where they're spending money. So they're 34 to 45 range now. So your Generation Xers are now, they're out of that bucket, really not spending money anymore. And now you've hit, which is kind of a really interesting thing for our economy. That's why we're seeing the economy really staying very robust. No indication or signs of inflation. The Fed has just announced they don't see any, I don't understand how that's possible, but GDP is very high, no indication of inflation. People are still spending money aggressively. Unemployment, is very low. Employment stats are very high. I mean, unemployment is at the 6.9%. That's actually kind of high, but overall, when you factor a pandemic, that's kind of low. But you're seeing now the millennials and post-millennials spending money. They're spending money and they're driving cash. So it just creates, it mitigates that inflationary concern. Jerry, did you grab that number?
Yes, sir. They were born between 1997 and 2012. So that puts 24 between the ages of 24 and
ages of 24 and what?
Still calculating.
That would be 9.
9.
Yes, and 29.
Yeah. Watch that group. That's the group that's investing in Robinhood. That's the group that's scooping up Bitcoin. That's the group that's buying Tesla. And by the way, another mindset about the post-millennials, when I talk about them being more of an avant-garde group, more of a green group, they'll invest money and they'll continue to buy Tesla just because they like the CEO, not because they care about the fact that, in the past, my generation, Generation Xers, and maybe many of us on the call, we were more of a Warren Buffett era. We're looking at price earning ratios of a company, with the dot-com craze, where our group's going. This group is different. If they love that CEO, they don't care about price earnings ratio. They will invest just because they're passionate about the culture and the movement of that CEO, and they believe where that's going. Kind of the Steve Jobs era, if you would.
Well, and I think that's an interesting connection. I mean, I'm older. The Lee Iacocca's were, that was he was kind of the turnaround guy, and so that's an interesting correlation. And I agree with you. I think if they don't like you, as goes it goes the opposite way too. So they like the cool factor, which is again why they like to come to Tampa Bay, because we all of a sudden have the cool factor.
Well, this group's about values. You have to understand. I mean, they grew up in a different generation than we did. I grew up in a different era with, like you said, Lee Iacocca, things like that. We've seen, Reaganomics. We saw a massive recession in the 80s, and coming out of that, obviously we experienced 9/11 and things like that. This group is all about values. If they have to be able to connect with you to buy from you.
Well, this is interesting to me because I'm sitting on the cusp of the greatest generation and the baby boomers. Mm-hmm. So hear you guys talk about being old, Just doesn't relate to me too much. But when you talk about the day traders, and I guess it's the post-millennials, as you mentioned, Robinhood and GameStop, was that post-millennials that drove that market in one day and made it go crazy? Who was it?
You know, they're tremendous risk takers, and you know, it's a cultural type of a thing. So you know, they all bind together. They compete with one another. They don't believe. Generally, the post millennials don't believe in sort of uniform, traditional, rigid type stuff, right? Like they may not listen to a Warren Buffett, the owner of Tesla. You know, if he comes out and he says, "Here's what I believe," you know, we should buy this because it's green, they're going to go buy it because it's green, because they can identify. Where my generation may be like, you know, if Warren Buffett said, this is a great investment, it's got good long-term gains, da, 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 I'm going to buy for that purpose. So they're not really driven by economic results. They're more driven by, you know, connection in terms of alignment and things like that. I don't know if that answers your question or not, but it's just a different mindset. It's a different culture.
Yeah, thanks.
Interesting. Any other comments or questions?
Hey, Nathaniel, one other question. What kind of employees do they become?
Oh, that's a great question. Yeah, that's a really great question. So the life expectancy of most individuals that are either millennials or post-millennials can be less than 12 months. This is a group that believes that they should be moving up very quickly in the ranks. You know, my era was you had to work really hard, and you had to work for a long time to get to where you wanted to be. And you may get to some level of leadership status in a decade or so if you did all of these things, and you had to be very subservient to your boss. This is not how this group is. This group believes that there is still a heavy sense of entitlement to a certain degree. That's not a bad thing, by the way. I don't mean entitlement in a negative way. By entitlement, I feel like they genuinely believe that, you know, they're cultured, they're smarter than many other people. And by the way, they are smarter. Remember, this is a group that grew up, you know, being on YouTube, listening on their earpiece to a symphony, typing a homework paper, and at the same time texting. You know, that didn't exist in my generation. We didn't do that. So this group has grown up at a very young age, multitasking. They're very good at that, and information is very quick at their disposal. So they are smarter to a large degree, and they believe that. They're quicker because they were trained quicker with information. They could process faster. So because of that, they feel a sort of a sense of entitlement, and they feel that they should be growing faster in the ranks. If you don't do a very good job getting them to understand their position and making them have an emotional connection to the culture of the organization that you're in, you could lose them very quickly.
The you know, when just on the government side, the average age in Pinellas County government's between 50 and 55. So I keep telling people that if you take a chance and because there's the broad sense of opportunities, whether you're, you know, cybersecurity to doctors in chemistry to, you know, whatever. There's a wide range of opportunities, and I think that they will advance quicker because of that aging group. I don't know if you're seeing that in the private sector as much, but certainly in the government sector, it is an aging out group, and there's a gap where if they got in at 25 or 26, they can really move quickly with advancement and opportunities. Not that I'm, you know, necessarily pushing government over private sector by any means, but I'm just saying there's opportunities there for that kind of thing. But it is, you know, again, it's not a 12-month and gone kind of opportunity either. So,
you know, it's a great point, Commissioner, because quite frankly, you know, you have a situation where government will have to compete against this sector. This sector believes that they're about independence, they're about growth, they're about culture. You know, they don't want to be confined and locked up. They don't want to be stuck in a cubicle or a workspace. You know, they want to be out and about. They want to invent something very cool. They want to create something fascinating. They want to be the next Steve Jobs. They want to be innovative. They want to be admired and reared by their peers. So all of those things are big, where, again, my generation will be like, hey, government's a great job. You could retire in 25 years. You could have a nice pension and have a good, comfortable life and play golf for the rest of your life. That was my mindset, you know, when I was growing up. Now that's really not that mindset. That mindset's about get out there, get on a boat, get on a jet ski, ride a bike, be out there.
And you mentioned earlier that working from home component. I'm wondering if that's going to become more of a even in the government sector, that we should be more open to, so that we're getting some of those younger people that have that opportunity in private sector. I mean, it's, you know, the
Yeah,
independence.
100%. I think so. I think if you could have people living at home that have the ability to, remember, this is a group that can work very fast. So they can, you know, if you compare, I'm 50, if you take a 25-year-old and compare them to me, they could multitask at a much faster pace than I can. So, you know, what may take me time to do a project, for them, they could do it very quick. So working at home and having more independence and space, absolutely. And I don't know if government can do this, but, you know, based on customer sat scores, and is there any way to bonus them? Because they like to accomplish goals. They like monetary goals.
Well, and it's interesting, I think we got Bob, and I think Bob, on one of the previous calls, we talked about, you know, the PSTA's kind of chemistry right now, or work makeup, and the majority of you, again, are still working, obviously not the bus drivers, but the majority of you are working from home. Is that still the case?
Yes, it is.
We've been back in the office since June.
But we've been wonderfully conservative, protecting our employees against the virus. And for most of us, it's agreed it has been far more productive because a lot of us are driving around to meetings around the region. Well, now that time is ours, where we can be doing memos, emails, putting together plans. For the first time in 16 years, I can actually get a lunch hour, which means I don't fit into most of my clothes anymore from the pandemic, but still, it has been surprisingly productive, at least the groups I work with that I see, because a lot more time is ours.
Yeah, I mean, I think part of the catcher is going to be, and I think it's probably going to be the more norm, is, you know, how do you know, when you're in the office and everybody sees everybody, it's a little easier maybe to measure, but how do you measure, you know, your success or how well you're doing, you know, or are you doing, like you said, Nathaniel, you're 50 and a 25-year-old, you know, if he can do his 8 hours of work in a 4-hour day, should he be able to be done for the day? You know, I don't know how we're going to be able to measure, you know, I think it applies to the car mechanic industry.
Doug, that's a crucial point. Everybody on this call, it's in leadership, needs to realize that. That's exactly the heart of the artichoke, what I'm trying to say. This is a group that can get their work done, which somebody may take them 8-9 hours, right? Remember, everything is automated in technology now. Somebody in their 50s may move a lot slower through technology. Somebody who's younger may move much quicker. So they may get something done in 4 hours as opposed to 8. If you don't bonus them by providing them some type of incentive, you're going to create, you know, they'll start to create some level of disdain for what they do. So you're right. Either you set milestones and goals, and if they achieve it, they're free to go because they want time. They really want time. They want more time to do the things that they want to do.
Is 4 hours to do 8 hours? I guess maybe that's the.
It's why you see a lot of people getting into real estate at a very young age right now. You see massive influx in real estate with licensees, and they're young because they want the freedom.
You know, I sit here, born in 1940, so I've been around a while. And we talk about government or whatever you're going to do. And we have Zoom meetings. I've come to believe over time that really the essential thing in anything that we do is all based on relationships, based on trust and integrity. If we do all this working from home, and we can sit here and Zoom and everything else, and we have a moldy, you know, we have a big task, a moldy project that involves many divisions or whatever it is. Can that be done really effectively in the long term without those personal relationships, without the ability to meet face to face and do that? Being cynical, I'm from Philadelphia, and you use the word multitasking. There's a fine line between multitasking and ADD. You know what I mean?
I do.
Yeah.
Yes.
So that's my question. I mean, I wonder where this goes from a cultural standpoint in the long term, in terms of building relationships and working together eyeball to eyeball.
So that's a really good question. You know, we have all been migrating, even in the mortgage landscape. We've all been migrating, and I think real estate as well, to becoming more of an automated culture. And, I don't know where we go from here. I think the big question becomes, when are we going to start seeing festivals? When are we going to start seeing concerts again? And when are people going to start socializing? And, when will county commission, when will government, give us the opportunity safely to get out there and do things? I don't know the answer to that. I do have some concerns about that because the younger generation is becoming more robotic about that.
And just real quick, and I know Commissioner Eggers has to run, and it's interesting that you say that as we're filling out an application for a festival in Oldsmar, our Oldsmar days, and we're 6 foot social distancing, and we're, one entrance in, one exit out, and if it's over 1,000 people, and while we're filling this out, we're watching the boat parade down in downtown Tampa with just chaos and mayhem. There's no plan. There's no, I know they're doing the best that they can, but, do you just throw caution to the wind and do it? Because there was clearly no social distancing and there was no one ingress and one egress. So hopefully as goes the Super Bowl, if we don't see a spike or in COVID, that maybe we have turned a corner. I don't know. But Commissioner Eggers, I know you got to go. I appreciate you as always being on the call. And I think you are actually our speaker either next month or the month after. I'm not sure.
Well, looking forward to that. Yeah, one of the things that has been difficult this year is obviously navigating between keeping things alive and opening and socially interacting on the, and then a lot of people who have been either correctly so or maybe excessively so scared, and so having the ability for them to get around in a safe manner. And so we've really not, since the governor shut everything down in April and then started opening back up, we've kind of stayed the same course, just trying to let people do their thing, do it responsibly, try to get the businesses going again, trying to, we're assisting the cities in kind of issuing kind of guidelines, if you will, for those events that you're talking about, so that we can, if the cities need a bad guy, they can use us. But at the same time, everybody's trying their best to figure out ways to do things, again, responsibly. And I don't think people want to be cavalier about it, but they do want to get on with their lives and start doing things. And it's still a difficult balance. Spring break is coming, and we're like, it's not the beaches that we're worried about so much. It's what the young folks tend to do at nighttime, and they congregate and they do stuff together, like with all the normal things that we all did at one point in our life. So it's not bad stuff. It's just we're trying to reach out to our bars and to our restaurants and to our nightclubs to try to bring some, like, we're not shutting down, try to be okay with it. We just don't want to tax our health systems. Numbers are coming down a little bit. Everybody, so we're just trying to be a little bit careful as we do that, but we're not, again, I don't think in Pinellas, I don't see it in Hillsborough either, that there's a move to shut things down. I think we're trying to figure out ways to do things differently and open up a little bit. I think it's really important. Nathaniel, you brought that up in your comments a minute ago, but mental health issues all over the place have really gone up, and we really have to be cognizant of that more and more every day. So anyway, we're heading in the right direction, I think, and we're just trying to be as cautious as we can without taking the, without slowing everything down and stopping things, for crying out loud. We gotta have a healthy, open environment at some point. So we got to get there responsibly, and that's kind of the messaging. So not easy, but
great message though. Yeah.
Thanks, guys. Appreciate it.
Thank you so much. I appreciate it. And I think unless there's some questions, I know everybody's got to go. We try and keep these as tight as we can. And as I mentioned earlier, Nathaniel, I'd love to have you come on periodically. You give kind of obviously I know you do mortgages, but you really give a broader, bigger picture of a lot of things that really all kind of tie together, whether it's the real estate or it's the generational changes, and they all kind of work together somehow in some big mixing pot. So it's nice to hear you kind of sort them all out and kind of add a different perspective to it. So I appreciate that.
Well, thank you. It's a pleasure being a guest here. Thank you for allowing me to serve, for all of you, and hopefully you found some of the information helpful today.
Thanks, I appreciate it. And you guys take care and have a safe weekend.
Thank you.
Thanks, everybody.